Ladies and gentlemen, happy Turkey Day to everyone. Yes, it feels like it's a weekend because it's a Thursday and the markets are not open, but coming tomorrow, the markets will be open for a half a day. So we're going to talk about kind of what I expect to happen, what I'm looking at. It's a half day, so it's not going to be too crazy, but there's some things we need to talk about. And I also do want to go over the data with AMC because on Wednesday, yesterday, AMC had a very strong day, and you did get that news about Amazon essentially creating more films to go to theaters, which is AMC's number one problem. Really, all movie theaters, that's their number one problem. It's not that people don't want to go to theaters. It's not people don't want to experience a movie in theaters. Absolutely not it. That is not going away. It's we have not had enough blockbuster movies to get people into theaters. So let's get into this information. We're going to keep this video nice, short, sweet, straight to the point because it is Turkey Day, and happy Turkey Day to everyone, or Thanksgiving, whatever you want to call it. I think Turkey Day sounds a little cooler. Nonetheless, let's get into it, guys. So on Wednesday, AMC stock did very, very well. Like I said, a lot of that was just the fact that AMC has been very bullish ever since earnings. A good aspect of that was we had news from Amazon that they are going to invest $1 billion into movie theaters to go, obviously, to theaters, which would benefit AMC greatly if that can bring more people into those theaters. And it looks like we're in a bull flag pattern right now. If you draw these lines, right, this is the pole, this is the flag, and it looks like you're starting to get that break of the flag to the upside. That is a bull flag pattern, and once we do get a break above this line, that is going to be direct confirmation that this is a bull flag, and that is what is happening. Now, you can pretty much get that confirmation already, in my personal opinion, because we have been above the 50-day moving average, and I think coming tomorrow, you might actually see that breakout and confirm this into a bull flag pattern, and you could be up, for the next leg higher, coming in between 870 and 923. Those are the 100 and 200-day moving averages. I do think you'd find some resistance around those levels because a lot of trading algorithms trade around those levels. They'll short stock, they'll buy stock at those levels, depending on what they're programmed to do, but it will be some level of resistance until it turns into support, like you've seen with the 50-day moving average. And even a good example of this was back here in September. It was resistance, quite strong resistance back here in September. You completely fell away from it, and then now it is turned into support for the stock. So just technically speaking, the stock looks very bullish. Yesterday, the stock was up 4.37% in regular trading, up 0.79% in after hours as well. So again, seeing a pretty strong move in after hours, and so did a lot of things. The S&P 500 went up 0.16%, and the NASDAQ went up 0.25% in after hours alone, after rallying 1% in regular trading. And some of this, a lot of people are going to call it low volume, and I think the bond market as well as the dollar really gave it away because the bond yields shot down on long duration, meaning that people expect over the next 10 years rates are not going to stay this high for that long, and they're probably not going to go higher than what we expect, right? The markets are expecting 5 to 5.25%. If the rates only got to go to there, and then the Fed starts cutting rates, and then they're back to 3% or whatever, wherever we're ultimately going to be over the next, call it 4 or 5 years from now. Well, buying a 10-year treasury or 20-year bond, makes a lot of sense when it's yielding 4%. So you did see a lot of people go out and buy bonds, driving down the yields on Wednesday, and that was a big factor of why the markets were so bullish. And it did come down to the Fed minutes and essentially what was said. Pretty much everyone is in unanimous agreement that they should step down to 50 basis point rate hikes, and not very many people seen the terminal rate being higher than what was previously forecasted. So that was very, very good. As far as the dollar, you got to go ahead and pull up UUP. But the same exact story there, guys. So people sell the dollar when they expect the Fed to not raise rates as aggressively. If the markets expected a 1% rate hike coming, or just bigger rate hikes coming for longer, the dollar would go up. People would buy the dollar because the Fed would be restricting dollars from the economy. Simple supply and demand would make the dollar more valuable. Well, the dollar dropped 1% on Wednesday, and it went down 0.21% in after hours. This is a clear sign as well that people are expecting less Fed tightening. Now, that potentially sets us up for disaster later on over the next 2 weeks as we get more Fed speakers and as we get Fed Jerome Powell speaking himself. If they talk about the terminal rate being higher than 5 to 5.25% like the markets are expecting, that could be a pretty negative thing, a very negative thing for stocks. But again, that's going to be a week or two down the line. We're not going to hear from Fed speakers, at least tomorrow. I don't think so at all. Let's go ahead and pull it up for all of you guys. Got to scroll back. I was looking through everything for next week because next week's going to be crazy too. And you could see nothing. There's no Fed speakers. There's nothing as far as data that could move the markets. It's probably going to be a pretty low volume trading day. And when you get low volume trading days, you tend to have positive days. Believe it or not, that's why November and December tend to be some of the best months to be in stocks, because they tend to have some of the lowest volume because people go away for the holidays. You get the Santa Claus rally, you got Thanksgiving, right? You guys get the idea. So nothing for tomorrow as far as economic data. You really want to watch the bond market and the dollar. Like I said, that is going to be two things I think that will really help drive the markets. If bonds drop a lot tomorrow, if the dollar rallies tomorrow, you're probably going to have a red day in the markets. Now, vice versa, right? If the bonds continue on this upward trajectory, it's probably going to be pretty bullish. Same thing with the dollar. If the dollar continues downward, probably going to be pretty bullish. And the dollar alone is really at a very interesting level. If you continue to flush on the dollar, that could fuel a lot of bullishness for the broad markets. Now, nonetheless, let's go ahead and talk about AMC and get into the Ortex data. And you're looking at the dollar amount that is currently sold short in AMC at about $800 million, 20% estimated short interest of free float. Free float out on loan sitting at about 35%. Let's go ahead and back to that page. At about 35%, shares out on loan about 180 million, days to cover 6.64, cost to borrow 34.01, and utilization of 100%. If we look at the live short interest, we could see well, we can't see anything because the numbers say not available, but the last reading we had with the cost to borrow max was 83.5%. Cost to borrow minimum was sitting at about 7.26%, and the cost to borrow average sitting at about 45.65%. So these numbers, certainly looking very, very bullish. And as of the option activity on Wednesday, yesterday, we seen 25 orders totaling $782.5 thousand, positive order value of 44%. So a little bit more positive than what we have been used to seeing. And the calls are sitting at 65.5%, puts us sitting at 34.5%. So it wouldn't surprise me to get a broad market rally. It wouldn't surprise me to see some of the gamma activity lead to AMC even moving higher, considering we do have about 91,000 calls that are still out of the money. Now, over the next 2 weeks following this Friday, it's going to be pretty slow as far as option activity, and then December 16th, you got 122,000 calls that are out of the money and about 7,700 calls that are currently in the money. That is going to be a very exciting one, guys, but nonetheless, not too much to actually add there. Fed minutes did seem to be pretty bullish. Watch the COVID cases in China. You're getting this article. Mainland China total daily COVID cases soar above Shanghai lockdown levels. If you get more lockdown kind of news coming out, that could obviously be bad. But it doesn't look like anything can stop the bull as of right now, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Enjoy your turkey day, and I will see you in the next one.